Welcome to this week's episode of Liquid Options TV, a weekly show about trading options. My name is Eric, and we're going to continue last week's discussion on managing a losing bear call spread. So just to kind of recap from last week, if you want the full details, just go back to the last video posted on the channel. But basically, I'm in an iron condor at this point. I've already rolled up my bear call spread to the 2900, 2910 strike. So I've sold the 2900 and I've bought the 2910 for protection. Both of these, both sides of the condor in October. So there's 50 days or something like that. So there's a lot of time left. And you can see I'm definitely taking heat on this particular trade. Now, if you remember from last week's video, on Friday, I posted the video on Saturday, but on Friday, I had bought some IWM call options to hedge heading into the next week because I thought, well, if we gap up or move higher, my IWM call options will sort of offset some of the losses. And that actually worked out pretty well. So let's go to IWM real quick. Now, IWM didn't perform as well as the S&P, but basically IWM did gap up, pushed higher, and basically on that same day towards the peak of IWM that day, I actually sold those options. So I had a really quick IWM profit that I can now sort of use that money to, potentially move my SPX spread around. So ultimately, I just, for the rest of the week, I didn't touch this trade at all. I just left it alone. But then on Friday, yesterday, heading into the weekend, and we have the 3-day weekend, Labor Day is Monday. It's going to be a short week. I usually think that most of the time the weeks are pretty positive, flat to neutral. We got a little bit of after hours news on Friday that Canada and the U.S. are set to sort of reset their talk. So we had a little bit of a pop after hours there. So it's possible that we actually gap up and rally even more next week. So what I ended up doing, I didn't know that before the bell, but I wanted to talk a little bit about VXX, and I'm going to change my indicators here a little bit. Whoops. Let's do this. I'm going to change to the 10-day moving average, and there were some studies done. I'm actually going to do some back testing here on the research site this month. And speaking of, I just finished up the RSI series. I posted the final in the series today. So if you're on the email list, you'll get something about that. But if you haven't checked out that whole series, be sure to do that. I'll put a link in the description. It's only $15. You'll get the entire series as well as all the other strategies. And there's some really incredible results with some, very simple sort of indicator here. But anyway, so with VXX, there were some other studies done, not with options, but just with the sort of price action. And for those have, kind of know, VXX tends to move lower over time. And on Friday, VXX closed below the 10-day moving average. So this is, from the other study that I had seen, this is actually a really good time to short VXX. So a lot of times, VXX will pop and you're like, well, how high is it going to go? And you don't really know. So the study that I came across showed, well, wait till it comes down and closes below the 10, and that can be a good time to short VXX. So obviously we like to use options. There's bear call spreads. I just straight up bought some put options. I bought October Delta 60s. I want to say they're the 29s or 30s or something, but I straight up bought some put options. So here's the general idea. First of all, this particular study shows that when VXX closes below the 10, it tends to move lower, so you can kind of catch the trend. And it did so here, it did so here a little bit, and it's kind of been chopping sideways. But the idea is if the market does rally even more next week, my bear call spread's going to really suck and be underwater, and I'm going to have to adjust. But VXX would also be moving lower as well because volatility in theory would be contracting a little bit. So that is my hedge heading into next week. So that way I'm going to go. We're going to a hotel tomorrow, going with some friends, going to be at the pool, and I am not going to be thinking about this losing trade. And I think that's basically part of the game, right? Psychology and math. The psychology is, okay, I'm in a losing trade. I can't think about anything else. I need to do something. What's going to happen next week? I don't want to deal with that. So I prefer to use math to help my psychology. And the math says that if VXX closes below the 10-day moving average, you might want to, it's a good time to get short. The other side, it says, hey, my bear call spread is sucking wind here, and if it goes higher, it's really going to suck. Now I can still adjust and whatever, but at least going into Monday with Labor Day and spending time with the family, I'm not really even going to think about this because I know that if we do pull back, I'm going to lose a little bit on VXX, but my bear call spread is going to do a little bit better as well. So that's kind of how I'm trading right now. I just want to give you guys a quick update, and I'm going to be doing more of these videos, just really quick, short, kind of price action videos, mainly on the S&P. So definitely subscribe to the channel and be sure to check out the RSI series over on Patreon. I definitely appreciate all the support over there. You guys have a great weekend, and we'll talk to you next week.